So, students, it's another great evening meet again for this session. So, this is your normal tutor, CPA Dinochoy. So, we are going to look at another area of financial reporting and analysis. So, yesterday we did a question on consolidation, that is from the previous sitting, the sitting for December 2023. So, we are going to continue with the same sitting, but now I'm going to do question 4. I'm going to tackle question 4. So, question 4 of that area concerns a statement of cash flows, the statement of cash flows. So, that is what we are going to look at. So, I'm going to read the relevant question, then we do the relevant presentation. So, I'm going to read that question. So, as I read the question, I think you can open it from your end because I have attached the link. So if you check under the information down here, under the information of after the financial reporting and analysis, so there's a link to the past papers I have attached. So you can be able to open so that we can be able to go through the question together to create more understanding. So I can also open it from my end so that we can be able to tackle it together. So I have said the question is for December 2023 sitting. That is question 4. Question 4. So question number 4, December 2023. So it's a question for statement of cash flows. And remember that nowadays a statement of cash flows is under published. It's a part of the published financial statements. Beside the preparations of the statement of profit or loss, statement of changes in equity, and statement of financial position. So this question was saying this. So they said that the following financial information was extracted from the accounting records of a Bundo Limited, a public limited company. We have the statement of financial position as at 31st October 2023 and 2022 respectively. Then we are given a statement of comprehensive income for the year ended at 1st October 2023. Additional information, we have 3 additional informations, meaning that there are not many. So the first one was that the property, plant, and equipment was made both cost of valuation, accumulated depreciation. Then they said during the year ended 31st October 2023, the property was revalued upwards for a gain amounting to 1,200,000. The company does not make any transfer for excess depreciation or bond revaluation. However, it accounts for the deferred tax on revaluation gain. The income tax rate applicable to Bundo Limited is 30%. Depreciation on property, plant, and equipment has been charged to the profit or loss. Number 2, during the year ended 31st October 2023, Bundo Limited acquired some patent rights at a cost of shillings 5 million. Any amortization of intangible assets has been included in administrative expenses. The company repaid, that is additional information number 3, the company repaid some borrowing which had matured during the year and they issued a new loan amounting to 3 million. So you are told to do a statement of cash flow for the year ended at 1st October 2023 using the indirect method in accordance with the requirement of I7, statement of cash flows. So here, you could have said that Bundo Limited, so Bundo Limited, so statement of cash flows, statement of cash flows, statement of cash flows. So we have the statement of cash flows. So that is for the year ended. So our financial year was ending on 31st October 2023. 31st October 2023. So here we have shillings in what? Shillings in thousands and shillings in thousands. So before I start the presentation, anyway, because I've already read what is required of you, so the examiner was in need we do some presentation of a cash flow statement. So before I do the presentation, I can take 2 minutes to share this link for the live session to other platforms, so that other students who are not aware can be able to access it. So before we start the presentation, we can share. So even for the students who will be watching these sessions later on, maybe after this live session, try to share to other students, to other platforms of accounting, to other platforms of financial reporting, so that more students can be conversant on how statements of cash flows are done. But this one is important even in financial accounting. It's important in advanced financial reporting, and even in other courses other than CPA. Even in other courses other than CPA. So and now we can go direct to the presentation of the statement of cash flow using the indirect method, of which remember that when doing the cash flow statement, you present it based on 3 parts. That is the operating activities, investing, and financing. So we start from the operating activities. We start from the operating activities. So when we talk about operating activities, remember that we start from the point of profit before tax. Profit before tax. So this profit before tax, so is that question of mine? So remember that the profit before tax, profit before tax must be adjusted. So the value of the profit before tax, remember, is picked from the statement of profit or loss. Statement of profit or loss. So statement of profit or loss. So you pick these, you start with profit before tax. So based on this question, number 4, from the income statement, given the profit before tax was 18,700. So the 18,700. So under this profit, we have operating incomes or expenses. That is operating and non-operating. Operating and non-operating incomes and expenses, which have been adjusted to get the profit before tax. So the one which are non-operating, which were adjusted to get the profit before tax, you need to adjust back. Like now, things like depreciation is non-operating. Things like amortization is non-operating. Things like loss on disposal. We have things like gain on disposal. Gain on disposal. So depreciation, we have things like amortization, loss on disposal, gain on disposal. So items of this kind, so they are non-cash flow items, and at the same time we call them non-operating incomes or expenses. So to arrive at the profit before tax, the non-operating incomes or expenses must be adjusted. Now, during the presentation, When you have started with the profit before tax, then we say adjust with. So adjustments are made. So adjustments you make against this are the non-operating items, that is incomes and expenses, which were either added or deducted to arrive at these. So we can start with the depreciation. So in this question, I can realize that in the additional information, number one, you are given accumulated depreciation, and I can attest that there was no another depreciation provided. There was some accumulated depreciation. So depreciation account. Depreciation account. So we need to know depreciation for the year, because they said in the additional information, they said there's a paragraph in additional information number one. They said depreciation on property, plant, and equipment has been charged to profit or loss. So it has already been considered when arriving at 18,700. So we need to determine that depreciation for the year, because what we are provided with is the accumulated one. So balance brought down for the accumulated, then we have balance carried down. So remember that when I talk about balance brought down, they are the balances from the previous year. Because in this question, we have 2 consecutive years, 31st October 2022 and 31st October 2023. So when I say balances brought down here, they are the balances from 2022. Because the balances from October 2022 are the one opening 1st November 2022 here. So the balances brought down are the balances from the previous year. So accumulated depreciation as of 2022, given in additional information number one, is 12,600. Then the balance as at the end here, 31st October 2023, is given at 19,800. Is given at 19,800. So meaning that the balancing figure is the depreciation for the year. So DIP for the year is the balancing figure. So the balancing figure there is the depreciation for the year, because there is no another adjustment I could have done here. So the adjustment which the depreciation maybe which could have arisen is if there was another asset which was disposed, and on the process of disposal there was some accumulated depreciation on disposal, which I could have debited depreciation on the disposed asset, but we don't have any asset which is disposed. So meaning that here we have 7,200. So we have 19,800. So here we add back, because already the depreciation for the year, that value of 7,200 has been charged to the statement of profit or loss. So we add back the 7,000, so which is depreciation for the year. We consider it has already been deducted to arrive at this. So another non-operating item which was present here is concerning is concerning amortization. That is note 2. Note 2. What is amortized? They said during the year 31st October 2023, Budo Limited acquired some patent rights at a cost of 5 million. Any amortization of intangible assets has been included in administrative expenses. And we always know that admin expenses are operating in nature. We don't adjust admin against the profit before tax. But now what they did, amortization, which I'm going to determine, amortization has been done what? Has been included under admin. So we need to determine the amortization. Then we do what? We add back. Because to arrive at 18,700, it means that the amortization has already been deducted. And this one was included under the administrative expenses. So meaning that I have to do an analysis based on intangible assets. So the balance brought forward for intangible assets, balance brought forward is 23,680. They went ahead to get another intangible asset based on the additional information. The one which we have already looked at, the one which they acquired. So they did a purchase. Remember patents? Patents is patent rights. These are intangible assets, 5,000. So this one gives us a total of 28,680. You skip one line and say balance carried forward. So the balance carried forward, intangible assets, we have 24,290. Why is the value of the intangible assets reducing? Because there was amortization. That is how you were supposed to determine amortization for that one. So 28,680 minus 24,290. So this is 43,90. So that is amortization. Amortization, which was already included under the admin, because that is what they said according to this question. They said that any amortization of intangible assets has been included in admin. And we have said that admin is operating in nature, but amortization is non-operating. So that 4390, which was deducted to arrive at this, because it was inside the admin, we need to add it back. We need to add it back. So those are the two non-operating items which are under additional information. We can check any which is remaining. So the one which is remaining is the one which is under the income statement itself. So go to the profit before tax. Go to where they have profit before tax, then you move backwards. So other than the revenue, cost of sales, other than cost of sales, these items are operating in nature. Distribution, admin. But remember at admin they talked about amortization, which was here, which already we have adjusted that one. Then we have finance cost. So, but now finance cost is non-operating in nature. So we have finance cost. So finance cost must be done what? Adjusted against the profit before tax. So the finance cost being 3,800. It was deducted, we add. So up to this point, we say cash flow before changes in working capital. Cash flow before changes in working capital. Changes in working capital. Cash flow before changes in working capital. So we have 18,700 plus 7,200 plus 43,90 plus 3,800. So that is 34,090. 34,090. And now changes in working capital. Changes in working capital. Remember, changes in working capital, we look at increase or decrease in current assets or current liabilities. Of which you know well that under current assets, we look at inventory and receivables. Under current liabilities, we look at payables. So increase you compare from the end of the previous year and the value as at the end of the current year. So inventory, there was an increase from 5,760 to 5,880. So increase in inventory. So that one you raise because there is cash outflow. Increase in inventory. So increase in inventory. So the 5880 minus 5760. I will be able to determine that. So there's a cash outflow. There's money out. What about receivables? There's a decrease from 4,290 to 4,070 shillings. Decrease in, we have decrease. So add decrease in what? Decrease in receivables. So the decrease in receivables. So we need to determine the value, the difference, 4290 minus 4070. Then now we go to liabilities, of which I've said under liabilities we consider payables. Also, there's a decrease in liabilities. So when there's a decrease in liabilities, it means that you have paid, you raise, there's cash out, decrease in payables, decrease in payables, money out. So decrease in payables, that is from 8,200 to 7,800 to 7,800. So we can get the values. So here, 5880 minus 5760. So this is 120. 4290 minus 4070, 220. Then the last one, 8200 minus 7800. So this is 400. So we can be able to get cash generated from operations. So what we get here is cash generated from operations. Cash generated from operations. So 34, that is 34,090 minus 120 plus 220 minus 400. So this is 33,790. Then now the next item to be considered is the deduction of tax paid. You need to consider the tax we paid less tax paid. So remember, for tax paid, if I do a working year for tax, I consider deferred tax and current tax. And this one is from the non-current liabilities and current liabilities consecutively. So balance brought forward for both the deferred and current tax, balance brought forward. So the balance brought forward from 2022, end of 2022, deferred tax is 7,070 shillings plus the current tax being 5,570. Then I have to add the income tax from the profit and loss statement. So the income tax, the tax they were supposed to pay during the year. So from the statement of comprehensive income for the year, so the income tax was 48.30. Then under additional information, they said something that in note 1, there's a paragraph there. They mentioned that during the year ended at 1st October 2023, the property was revalued upwards for a gain amounting to 1,200,000. The company does not make any transfer for excess depreciation or bond revaluation. However, it accounts for deferred tax. So deferred tax due to revaluation. Deferred tax due to revaluation, which is there. So remember that you are told use 30%. That is what they say, that the income tax rate applicable to Budo Limited is 30% of the revaluation. So what is the value up to that point? So here we have 12,640 And the 30% times 1200 is 360. So 12,640 plus 4830 plus 360. This is 17,830. 17,830. So now we need to compare with the balance carried forward of the deferred tax and current tax as at the end of 2023. That is October. So we have 6750 deferred tax and current tax is 4230. 4230. So 6750 plus 4230, that is 10,980. So why is it reducing? Because they paid what? Tax paid of the balancing figure is the tax paid. So 17,830 minus answer, that is 6850. So that is what I am going to deduct here, 6850. So that I get cash flow from what? From operating activities. Cash flow from operating activities. So 33,790 minus answer. So yeah, we have 26,940 as our A, the operating activities. So remember that for the students training now, at this time, I'm doing the statement of cash flows, presentations of the statement of cash flows. December 2023, sitting, financial reporting. This is FR, financial reporting. Intermediate level, the course offered by CASNEP. Intermediate level. So the FR, December 2023, question 4. That is presentation of the statement of cash flows. So we have done operating activities. So cash flow statements are presented based on 3 activities. The operating, investing, and financing. So the next part I would move to is the second part of the question. That is the investing activities. Then we finish with financing. So the investing activities, remember that for the investing activities, what am I going to look at under the investing activities? So for the investing activities, remember that we consider activities that lead to change in size and the composition of the non-current assets. The items which does what? Lead to the change in size and the composition of what? Non-current assets, e.g., the acquisition of plant and machinery, acquisition of investments, investment income, proceeds on disposal of plant and machinery, proceeds on disposal of investment. So in short, we will be looking at the items which will lead to the change in size and composition of what? The non-current assets. That is okay. So, based on our question for December 2023, financial reporting, intermediate level, CASNEB exams. So, based on this question, so which items do I have which leads to the change in size and composition of non-current assets? So, we'll have to do the analysis of property, plant, and equipment so that I can check if there was a disposal or a purchase of any asset. So, balance brought down. The balance brought down for the property, plant, and equipment. The cost, I will use the cost analysis model. So the cost is 126,200. Then there was a revaluation. There was a revaluation gain. That is based on additional information. Number 1, there's a revaluation gain of the assets. The revaluation gain of the assets of the 1,200. So up to that point, the total value of the assets after revaluation is, that is 126,200 plus 1,200. You have 127,400. But the balance carried down, the costs of the property, plant, and equipment as at the end of the year, 2023 October, that is 138,200. So meaning there was an increase from 127 to 138. That one, it means that they did a purchase. They did a purchase. If it's a reduction, that is when there's a disposal. They did a purchase at 10,800. So cash paid to purchase an asset. So that is 10,800. 10,800. So this is cash outflow. That is money out. That is money out. Then after that, is there anything they purchased maybe? Remember, under the additional information, there's patents which was acquired. That is additional information number 2. During the year, ended 31st October 2023, Budo Limited acquired some patent rights at a cost of 5 million. So again, that is cash paid to acquire an intangible asset. So that is 5,000. So that is another cash out. So total, those are the only items which can change the size and the compositions of the non-current asset for this question. So we can have cash flow from investing activities. Cash flow from investing activities. So which is 15,800. So that is B. Then C, we talk about financing activities. We talk about the financing activities. So Evans or Yugi, I can see you are saying one of the best lecturers. Thank you for your message. So Evans or Yugi, other than these live sessions we do here on YouTube, there's other sessions I do during the evening hours. Like now, today from 8 p.m. to 10 p.m., I will be doing a Zoom class for the financial reporting and analysis. So you are welcome to join. And whoever would be interested to join, you can be able to reach out so that we can be able to do more work under those under that platform of Zoom. There's other classes other than these live sessions under YouTube. We do other classes under Zoom platform, so you can join. So for you to join, use my number to contact me so that you can get more information. My number is this one. So 0728 760 546. So let's finish this question by doing the last part of it. So the last part of the question is financing activities. So for the financing, remember that we look at the equity part and some part of liabilities, because any entity is financed by equity or liabilities. So let's look at the part of equity, then maybe under liabilities. So under the equity, there is ordinary share capital and share premium. Ordinary share capital and share premium. So these are working I'm doing. So the balance brought down, we combine the two. So based on the question I have, based on this question, the balance brought down for the ordinary share capital and share premium, we have 32,000 plus 2,600. So that is around 34,600. So there was no any issue of shares. So what I need to compare is with the balance carried down of the ordinary share capital and share premium, because there's nothing else. Maybe if there was a redemption of shares and other things, that is when I could have adjusted against 34,600. If there was a maybe bonus issue and rights issue, sorry. So balance carried down For the ordinary share capital is 40,000 plus what? 3,000. So that is 43,000. So there is a cash received due to what? Issue of shares. But since there is a premium, these are just cash received on the issue of new shares at premium. So I can see there's a premium there. So which is this cash received? 43,000 minus 34,600. So this is 8,400 here. So after the ordinary share capital and share premium, we move to another part, which is profit. So for the profit, we need to check if there's any dividends paid to the shareholders. So retained profit, the part of retained profit. So balance brought down. So for the profit, balance brought down is 42,400. 42,400. So the 42,400, that is it. Then we add the profit for the year from the income statement. So profit for the year was 13,870. So that is 7,256. So this is 56,270. Then now we compare with the balance carried down of the profit so that we can check if there's dividends paid to the shareholders. So the balance carried down is 52,770. So 56,270 minus 52,770. So dividends is 3,500. So dividends paid. Dividends paid. So dividends paid to shareholders. Dividend paid to shareholders. So that is 3,500. 3,500. After that, we go to liabilities. That is there's long-term borrowings. So long-term borrowings, there's some borrowings they did. So we need for borrowings, we need to do analysis. We check if they paid any loan. So long-term borrowings. Long-term borrowings. That is the next item we consider. So for the long-term borrowings, balance brought down for this one is 46,800. 46,800. But remember, under additional information, number 3, they said that the company repaid some borrowings which had matured during the year, and they issued a new loan amounting to 3 million. So there's that new loan which was issued of 3. So this one, these 3 will give us a total of 49,800. The total borrowings. Then balance carried down being balance carried down of the borrowings based on the question is 37,550. So 49,800 minus 37,550. So that is 12,250. The reduction. So this is loan repayment. It reduced because they paid. So we have loan repayment. We have the loan repayment of 12,250. Then even the 3,000 was supposed to be considered. The 3,000 was supposed to be considered. So remember that they said the company repaid some borrowings which had matured during the year, and they issued new loans amounting to 3. So this one 3, other than the analysis we have done, issue of a loan. So the 3,000 could have been added. Remember, this one is a loan repayment. We deduct. Then finally, we need to check the interest paid. Interest paid. So this one I can even do direct, because for interest paid, we have interest payable. Balance brought forward. The interest payable. 48. Add the finance cost to get the total interest payable. The finance cost from the income statement is 38. But the interest payable by the end of the year is supposed to be 3,500. So interest paid is 4,800 plus 38, then minus 3,500. So this is 51. Interest paid. The interest paid. So that up to this point, I can be able to get the cash flow from financing activities. Cash flow from financing activities. So the cash flow from financing activities, so you take 8,400 minus 3,500 minus 12,250 plus 3,000 minus 5,100. So this is a cash outflow of 94.50. So we can be able to get the net cash flow here of net cash flow. If we take A plus B plus C, so 26,940, but this is a negative, minus 15,800 minus 94.50. So this is 1690. So we need to check if the opening cash we have, then after transactions during the year, does it tally with the closing cash? So the opening cash which we have is the cash and cash equivalent under current assets, cash and cash equivalent under the current assets. We have 4670 here opening, and here we have 6360. So if I will come to the statement, net cash flow is 1690. I add opening cash and cash equivalent. Opening cash and cash equivalent of 60, that is 4670 here. Would I be able to get this? That is what we are trying to confirm. So you can see I'm getting 6360, which is the closing cash. So that is the closing cash and cash equivalent. So that is how you were supposed to do this question for December 2023, question 4. Financial reporting, intermediate level, CASNEB exams. So already we have done 2 questions for FR, for our sitting. We have done the question for group. We have done the question for cash flow, this one. So by Friday, I will be able, by Friday or weekend, I will be able to do the published. Then we finish with partnership next week. So in the last sitting paper, you can see you are supposed to be conversant only with 3 topics. The first one is group, second one is published, because cash flow, and this is the same. This is one topic. Cash flow is part of published, because other statements of published are preparations of the statement of profit or loss, statement of changes in equity, and statement of financial position. And all of these was tested in the last sitting paper. Then there was partnership. So if you are conversant with group, cash flow, published, under published, I mean those other three statements I have mentioned, then partnership, then other topics to be conversant in FR is branch and what? Financial analysis. Branch and financial analysis. If you are good in these topics I've mentioned here, you have more than 60% in your exam. So for you to be conversant, what are you supposed to do? For you to be conversant in an easier way, for you to be conversant with these topics, there is a Zoom online classes I carry out. Zoom online classes, like today from 8 p.m. Today, 8 p.m. we have a FR, and even tomorrow from 8 p.m. to 10 p.m. So you can join. So call 0728 760 546 for more info on how to join the ongoing sessions. Thank you, the likes of Evan Soyugi and the other students who are following this live session under the YouTube platform. And welcome. Asante sana for the attendance. And never forget to subscribe to the channel. We are heading to the 10,000 subscribers. So we are almost there. We are missing around 200 subscribers to get to 10,000. So make sure you subscribe beside watching, and share the link for this channel to other accounting platforms. We have come to the end of the session today. Let's meet next time. I have said I will be doing the December 2023 published, the other part of published which remained. There's a question there whereby they tested preparations of the statement of profit or loss, statement of changes in equity, and the statement of financial position. This is question number, that is question number what? That is question number 5, December 2023, financial reporting and analysis. December 2023, financial reporting and analysis, question 5. They just needed 2 statements. Statement of comprehensive income, statement of financial position, 20 marks. That is where I will be making my next video from. Yeah. Thank you once more.